Yes, we have broken all-time highs in this huge ascending triangle. We've also done it with a huge amount of volume. So I'm going to be showing you my crazy price targets here in the next few days. So you want to stay tuned in this episode. And also, I've got bad news for you if you're holding dollars. In the technicals here, the dollar index has formed this diamond reversal pattern. This is an extremely bearish pattern. So I've got bad news for you. In 2021, we are going to come all the way down to these levels. The dollar is going to crash massively. But on the fundamentals, the dollar also is going to crash because we have printed 22% of all US dollars in 2020. This is not going to make the dollar more powerful. It is going to devaluate it a lot, guys. So very, very bad news for the dollar. And also we'll be checking out $27 billion asset management firm buying Bitcoin. So if you think you're going to like this content, guys, make sure to smash the like button and let's go straight into the video. Hello there, Andy here. Welcome back to another episode of Bitcoin Sensors, where you subscribe for the quickest technical analysis and news on Bitcoin, cryptocurrency, and the financial markets. I am not a financial advisor, so don't buy or sell anything that I say. And said this, let's go straight into the charts. We have broken all-time highs, this huge ascending triangle with a huge amount of volume. I'm going to show you the price targets here on the technical analysis. It's getting the back of this triangle, and from the breakout, we should be looking at the $22,700 region. So this is what I'm expecting in the next few days. Yes, it is natural if the Bitcoin price comes back down and retests this resistance, which is support now. So this is a very natural thing if it does this in the next few days. But I'll be looking at the Bitcoin price before a week going to the $22,700 range. And taking a look at the dollar index chart, I have really bad news for you guys if you're holding dollars. This is a diamond reversal pattern, and this is the weekly chart. So 2021 is going to be a very bad year for the dollar. I'm going to show you the technical targets from this consolidation phase in 2013, 2014, the first leg up before forming this diamond reversal pattern. The target here from the breakout, it is coming back down to the 2008, 2009 levels, guys. So this is really bad news for the dollar. This is bad news on the technical analysis here on the charts, but the fundamentals are even worse. How can the Federal Reserve print 22% of all the existing dollars in 2020? Let's go through this article. Research shows that the Federal Reserve has taken advantage of emergency repo operations, injecting more than $9 trillion into the market since September 2019. A recent research report shows that while the Federal Reserve reveals the daily money flow, the Fed will not share information about buyers with whom it cooperates to pump money into the market. Estimates are that 22% of the circulating US dollar was printed in 2020. The most recent WSP, this is the Wall Street On-Parade analysis, shows that the Fed is in talks with hedge funds and financial institutions such as FrontPoint to get input from the markets. The Fed was leading an emergency authority from 2007 to 2010, and once again the central banks lead the three major emergency authorities. These are money markets, mutual funds, liquidity facility, credit facility for market makers, and commercial paper funding facility. Every time it is the same story. This is to continue the rat race. The Federal Reserve prints a huge amount of money. They give it to institutions, to banks, and to give loans to the poor people, people that now haven't got jobs. Millions and millions of people around the world have not got jobs now, and they need to ask for loans, and they have huge interest, and they need to pay it out during 4, 5, 6, 10 years. And this is just to continue the rat race. And if you have any savings, well, your purchasing power is going to be devalued by 10%. So if you have $100,000 in less than 2 years, it might be about $90,000 of purchasing power. Guys, that's it. You need to hedge your money into Bitcoin, gold, but now your best chance is Bitcoin. And taking a look at the next news, $27 billion asset management firm buying Bitcoin. London-based investment firm Ruffer is allocating a small but significant percentage of its asset portfolio to Bitcoin as a defense against currency devaluation. The company, which managed about $27 billion in assets for individuals, families, pension funds, and charities, has set aside 2.5% of its multi-strategy fund of roughly $15 million to invest in BTC. In a note to shareholders, Ruffer describes the move as an insurance policy against inflated fiat currencies and as an added diversification alongside gold. Another investment firm coming into Bitcoin. Every single week we see banks, institutions, billionaires, investment firms. The FOMO is just starting, guys. The fear of missing out. I got my uncle phoning me saying he wants to buy some Bitcoin. A good friend of my mum also wants to buy Bitcoin. The FOMO is just starting, guys, so get yourself some Bitcoin before it hits hundreds of thousands of dollars in the coming years. That is going to be it for today's video. If you haven't seen the Bitcoin Census website, I'll be leaving a link in the description. We got great tutorials on how to buy, how to store, and even how to trade Bitcoin. We got the latest news, and if you are an experienced trader, I'll be leaving a link of the Dudex leverage trading platform. If you click on the link, you'll be getting an excellent bonus. And if you haven't seen the best tutorial of the Dudex leverage trading platform, click there on the video popping on your screen right now. Thank you very much for listening, guys. Make sure to smash the like button, and I will see you in the next one.